The whole tech world is now on high alert about layoffs. Almost every technology company has either announced layoffs or done them without announcing. It seems that no tech company has been spared. Every company is tightening their belt. That applies to tech companies of all sizes. This is the United States teeters on the brink of recession. Inflation is raging all across the globe. The Federal Reserve is aggressively raising interest rates in order to fight inflation. The housing market is softening and even declining in some cities. There are layoffs all across the United States, but Silicon Valley is particularly hard hit. We are covering this and updating you every time there is news, because we know that this is the most popular topic on this channel. As you know from previous videos, even Google and Meta platforms are having layoffs. Except they are not calling them layoffs. But everyone knows what is happening. This video continues our coverage of the wave of layoffs sweeping the United States. And, in this video, a little more focused on Silicon Valley. What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. This week is an important week for the jobs market. Economists are watching closely to see what is really happening. Are layoffs just getting started? Or, are more layoffs on the horizon? You are going to see people update their resume probably, said Bob O'Donnell, of Technalysis Research. Job market experts said things are going to be rocky and uncertain over next few months for workers. They said inflation and global uncertainty are taking a toll on companies. Average consumers are tightening their budgets. Gas prices are up on the past week. Rents are rising in some places but falling in other places. People are not feeling as confident about the future. So, they are not spending as much. So, corporate marketers are dialing back their ad spending, especially online. And, with a lot of tech companies dependent on corporate ad spending, that adds to the uncertainty. The sands are shifting for big tech. More competition is coming in from all angles, especially from TikTok. The pandemic was a catalyst for technology companies. Lots of people had to work from home. They bought new computers and smartphones. They moved out of traditional technology hubs to Mountain West cities. Boise, Denver, Salt Lake City, Phoenix, Las Vegas, and Dallas. Now, the pandemic is mostly over. Layoffs are expected in the hangover from the pandemic. Look, we expanded fast in the pandemic and now there is some contracting, said O'Donnell. I don't think we are facing a recession, but companies seem to be positioning themselves just in case, said Wall Street technology analyst Jeff Bellisario. Despite a drop in job openings, the market is still solid, Bellisario added. But how solid? There are still a lot of jobs out there, added Bellisario. The economy is strong, but this is a wake-up call, said Ahmad Thomas, CEO of Silicon Valley Leadership Group. Economic data continues to show a robust economy, added Thomas. Big tech companies are positioning themselves, Thomas continued. Almost all big tech companies have announced hiring freezes, Thomas also added. Large companies are taking steps to prepare for an uneven economy, said Thomas. Basically, everyone in tech companies had to work from home during the pandemic. But now, tech companies are calling employees back to the office. Some tech workers want to stay as remote workers and continue to work from home. That is especially true of employees who move to other cities. That may work against a person if a recession hits, O'Donnell pointed out. If you are considering a candidate or looking, that might become a factor, added O'Donnell. The U.S. Labor Department is expected to release the most recent job numbers, which will reveal more data about employment. There is a lot hanging in the balance. And, to blame everything on the pandemic or a recession is somewhat simplistic. It is more complex than that. As everyone watching this channel knows, Google and Meta platforms reported decidedly disappointing Q2 earnings. So, big tech fundamentals are weakening. And, not just for one specific reason. Not surprisingly, both companies revised or revoked forward guidance. Google was still profitable and growing. But top and bottom lines were disappointing. Meta has posted shrinking revenue for 2 quarters and maybe a third quarter as well. Both companies have hinted at layoffs, but not actually made detailed announcements. Meta has begun quietly pushing out a significant number of employees. The company has restructured departments and given employees 30 days to find a new job within the company. This enables the company to cut a lot of positions without having to issue pink slips en masse. Analysts expect these reductions to be a precursor to deeper cuts. Talk on the street is that Meta is cutting 15%. The company has been cutting its financial guidance for operating expenses for a year now. These days, employees with good reputations and strong performance reviews are being routinely fired. Meta has about 83,000 employees, which is 32% higher than at this time last year. Google also requires affected employees to apply for new jobs in order to remain employed by the company. Google already cut half of the positions in its startup incubator called Area 120. Affected employees were told that they would need to find other jobs at the company 3 months. Google has 174,000 employees, which is 20% higher than this time last year. Realistically, there are probably a bunch of people at the company who shouldn't be here, Meta CEO Mark Zuckerberg said at a company town hall in June. Meta head of engineering told managers to fire all employees who were coasting. Shares in Meta platforms are down by over 50% so far this year and 65% within the past 12 months. The market capitalization of Google is down 27% over the past 12 months. Speaking at the Vox Code conference, Google CEO Sundar Pichai said that Google needs to be 20% more productive. Snap has publicly announced layoffs of 20% of its employees. This comes after Snap grew its headcount by 65% within the past year and a half. Despite all of this, Silicon Valley remains a competitive talent market. Google, Meta, and Snap are probably the most notable of the companies reducing headcount. This year, it is clear that Wall Street analysts are valuing profitability over prospective growth. As a result, unprofitable tech companies' shares are getting punished. It seems that the day of reckoning for tech unicorns has arrived. And all companies are forced to either be profitable, find a merge partner, or die. The window for initial public offerings is effectively closed. That is why some Wall Street investment bankers are predicting a wave of tech mergers later this year. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.